Hey, good morning, guys. Today is Thursday, April 22nd, 2021. Just wanted to make a quick video to go over two trades. First of all, I took a quick day trade on Tesla this morning, making about $700 in 5 minutes. So I'll go over that trade here in just a little bit. I also want to go over a trade that I have in my Tastyworks account here that I had to make an adjustment to. So I thought that that would be pretty interesting for you guys to see. So let's go ahead and roll the intro and we'll get started with the video. All right, guys, so just want to mention that tomorrow at the market close, so tomorrow, April 23rd at 4 p.m. Eastern, I'm going to host a live stream. We're just going to go over the market analysis, my thoughts on the market from this past week. We'll look at all of my open trades here in Tastyworks, and we'll also look at possible trade ideas for next week. A lot of the stocks that we like to trade are going to be reporting earnings next week, so it could be a big week in the market. Also, I am trying to post my thoughts on the market every morning. I created a new channel in my chat room called the Daily Squeeze. You can see where I kind of posted some information this morning. One of the things I was talking about was the overnight action in the futures. We're holding up near yesterday's highs after a monster retracement. You can see the market internals from yesterday. If we blow this up, look at this, 7-1 on the breadth for the New York Stock Exchange, 8-1 for the breadth on the NASDAQ. So that's very, very bullish numbers, guys. For reference, anything over 3-1 is incredibly bullish. Advanced decline line straight up and sideways the rest of the day on both of those indices. So very strong move higher across the entire market. The internals really supported that retracement higher. We'll look at the technical chart here in just a moment, but as I was saying here in my pre-market report is that the potential for a pullback in the morning was there, but I'd look for the overnight low to hold support on the S&P futures that comes in around yesterday's point of control at 41.5275, and that the potential for sideways price action is there given the large move yesterday. On the stock front, I said that Tesla was looking pretty good in pre-market, has the potential to continue higher over 745, and that 780 remains key resistance. So let's take a look at the technical charts really quickly here. Looking at your S&P futures, right? So 2 days of pulling back, essentially catching support on that 9-day, bouncing up, and so far doing exactly what I expected today, balancing, consolidating up here near the high of yesterday's range. So that's definitely bullish. We are just a stone's throw away from the all-time high sitting over us there at a little over 41.80 there. Okay, so that's definitely bullish. Now go look at Tesla, and we'll go over that trade here first. So Tesla had a big move up higher yesterday, right up into this level that I had marked at 744.50. And I was talking about how it was trading. You see, here's the move higher, pulled back in the after hours, but curled back up in pre-market, and right at the bell was trading right at that key level there. We got a big squeeze higher, and I was able to get in on that momentum. We'll look at that in just a moment, but the levels that I was looking at to the upside here, you've got 762, okay, 762 coming across here, and then 780 was the big level. 780 is the big level from when Tesla pushed up into its all-time high, kind of created a head and shoulders topping pattern here. You can see that 780 was the low of this pullback right here. And then more recently, last week, that 780 level is where we stiffly rejected off of right there. So I was thinking if we could get momentum and push up over that 744.5 level today, that we might be able to get to 780. But of course, 762 was the first level overhead I was looking at, but we couldn't even get to that. So let's go over and take a look at my day trade account for you, and you will see here. So, $705 in really less than 5 minutes. So I opened the trade at 9:31. So if we look at the 1-minute chart on Tesla, you can see right here is the opening candle, right? So we pushed up right up into pre-market high, and the tape on the 750 calls that I was looking at trading, and the tape on the underlying on Tesla itself was just going bananas. Huge, huge, huge momentum just really flowing in. So I jumped in on that momentum, and almost instantly from my entry, I was able to start scaling out. Less than 30 seconds later, selling my first contract at 12.85. From 11.40 entry, selling that first contract at 12.85 on this squeeze higher. About 20 seconds after that, selling my second contract at 13.50. Selling the last contract there at $14.90 at 9.35. So that was right here when it was starting to show this topping pattern, and I noticed that the tape just completely stalled out. So all the momentum just disappeared. So I knew right away that it was time to get out of this trade because Tesla is known for having some pretty decent pullbacks. So take my profits, see if it pulls back, holds support maybe on the VWAP, curls back up, and look for a secondary trade for a break over high of day. But no, sir, it just gave back everything and actually broke low of day. So that's why you take profits early in the morning, guys. So very solid trade, very quick trade with that momentum coming through. Huge conviction on that. Able to lock up, like I said, $700 in less than 5 minutes. I'll take that any day of the week. Excuse me. So jumping over to our Tastyworks account. So this is the trade I want to talk about. I've got this trade open on the corn futures. So you can see there's just a jumbled mess of contracts in here. I am down $220 on the position. It was originally an iron condor that has gone against me. So if we look at the risk graph on this, let me just get rid of the adjustment that I already made. And I apologize, guys. I was actually recording this adjustment that I was making in real time. And then I realized I was recording the wrong screen for you guys. So that really sucks because I was explaining everything as we went through it. But this was the original trade. I had an iron condor open. Last video I made, I think we were sitting right about here. We were sitting pretty. We were towards the middle of the iron condor, exactly where we want to be. But since then, things have materially changed, right? So it's really pushed up quite a bit and has since come up, threatened my call leg, and is about to trade through the entire call leg. So the original risk on the trade on either side of the iron condor was a max risk of about $800. Now, with any credit trade like this where we collected credit, at all costs, we do not want to realize that max loss at expiration. But the nice thing about options is that we have options. We can make adjustments to trades to mitigate that risk and maybe even still turn it into a profitable trade. So let's look at the technical chart here first, right? So here is the daily chart for the corn futures. It had about 3 months of consolidation. So we're looking at a macro breakout from this long consolidation period. So this has potential to really continue higher here. So this morning I noticed, let's see, if we go to the 15-minute chart. So I noticed that it pushed up in the overnight session here and then pulled back, and then we curled back up here on this candle. Look at the volume coming through on that candle. Pushed up into that resistance level, rejected, dropped, and then boom, bought right back up. So on this candle here, when we broke out above that resistance level, that's when I made the adjustment to the trade. So what I did is I came in and I bought 2 of the 610 puts. And then I shorted 1 of the 615 puts, and I shorted 1 of the 620 puts. So if we put that on, this is what the risk graph looks like now. Now, I wasn't able to put this adjustment on with one trade because Tastyworks didn't recognize the strategy. So I had to leg into it. I had to first short 1 615 put and buy 1 610 put. And then I came in right behind that and shorted 1 620 put and bought another 610 put. So what this looks like right now is, remember that our max loss on either side of the iron condor was about $800. And obviously right now we're concerned about the call side because it's obviously very strong and pushing higher. So I was able to collect a little over a $300 credit on the entire position with this adjustment, which meant that I mitigated my risk by over $300. So now if I were to do nothing else and it were to expire over here on this side, you can see my max loss at expiration would be $387. So immediately I've dramatically mitigated my risk on this trade. So I left my put leg in place, I left my call leg in place, but I just simply added some puts here by buying 2 of the 610 puts, shorting one of the 620 puts, and shorting, what was it? I think another 610 put. No, I bought 2 of the 610 puts, shorted 1 of the 615 puts. That was it. And then shorted 1 of the 620 puts. Getting confused there because I actually have a 615 call that I'm short. That was the call leg that's getting threatened. So anyways, as you can see with this adjustment, I've dramatically mitigated my risk to the upside. Now we will no longer realize that max loss on the upside. To the downside, unfortunately, down here where we were previously profitable inside of that iron condor, now we do have a loss. If it were to pull back and come back down here, we would no longer be profitable as we were before, but we would only be looking at $137 loss at expiration. If that were to happen, though, we can make further adjustments to the trade. So let's say that, if the corn futures continue to push up higher here, right now I'm just going to sit tight because I think that, like I said, if we look at the technical chart, obviously it's getting a little extended, especially if you look at the daily chart. Now, there's nothing to say it can't keep going, but you look at the daily chart, look how far away from the 20 EMA it is. It could continue to push up and then just trade sideways, or it may push up and pull back a little bit. So I just want to wait and see what happens after this new leg higher here and see if we get any kind of a pullback. If we do get some kind of a pullback, maybe to that 600 whole number there, find support and start to curl back up so we confirm the continuation of the uptrend, pullback, and then continuation of the uptrend. Then my next move would probably be to add another put leg in here. So let's just see what that would look like if I were to do that right now. And just to give you a good example of what an adjustment can do to this trade. So if I come in here and, right now with the pricing the way it is, because it's so far away, I'd have to come into, I'd have to come all the way up to the 565. I'd have to come all the way up to the 565 put. So if I short the 565 puts, and then I do a 20-point wide spread, the same width as this spread over here. Yeah, it's already down to $94, right? So let's say if I could get $100 credit. Now, I'm not going to make this adjustment now, but assuming I made this adjustment now, if I could get $100 credit for this trade, I would have to put up $381 to put this adjustment on. So I am putting on more risk to the downside, but I'm mitigating risk to the upside. So let's look at that on the risk graph. So you can see here is that adjustment if I were to do that. Now I have mitigated some of the risk here, right? So I'm only looking at about a $37 loss at expiration in this area. And then to the upside, I've mitigated the risk by another $100, right? Because I'm collecting $100 credit. So I've reduced the risk on the upside by another $100. You can see what happens if I start increasing the lot sizing on this. Now you can see that we'd actually be profitable in this zone here. And then we have this profitable, I didn't talk about that, but we have this max area of profitability here inside of this tent. This is obviously, the odds of the corn futures closing at expiration inside of this little tiny area is slim to none. So I'm not making these adjustments on this trade expecting to have the corn futures close here. But you can see that by doing this, I'm mitigating the risk on both sides, except for way down there on the far put side. But if I increase the lot sizing to, say, 4 lots here, now I'm collecting a $400 credit on this trade. And you can see that at this point, I'm profitable anywhere above this 565 put. So the corn futures can just keep going buck wild here to the upside, and I would basically be looking at a break-even trade. I'd be red after fees and commissions, but you see here P&L at expiration would be $12.50. Max profitability inside of this tent would be $762.50, but of course the odds of that hitting is slim to none. So we've hugely mitigated our risk to the upside. At this point, we could still get out of this trade break even if it were to keep going, if I were to make this adjustment now. If it were to pull back at expiration, I'd be looking at $262.50 profit anywhere above this 565 put. Now, the downside of that is that I've increased my risk dramatically here on the downside, right? So if prices were to come all the way back down and back below my put leg here, I'd be looking at about $4,700 loss at expiration. Now, obviously, the odds of that happening are very, very low, and that's why I want to wait to see if we get any kind of a pullback and then maybe round back up off of a pullback, prove that the bullish trend is continuing, and then maybe come in with a put leg. So that's just a good example of one adjustment that I could make to this trade to yet still turn it into a profitable or break-even trade. The other thing I could do is come in and continue to adjust this side of the trade by coming in with more puts to try and improve my break even. So let's just see, like if I come in and if I add to these, if I do something like this, what that does to the trade, right? So this is the other thing that I could do. If I'm confident that it's not going to come back down, I could still turn this into a nicely profitable trade by adding another lot to that adjustment that I made there to the 610 put, the 615 put, and the 620 put. As you can see, we have this tent of profitability here, but we also have, you know, the chance to profit to the upside quite a bit. So the risk here is that if it does pull back, you can see that my losses get quite big as we come down lower. So I think I would hold off on doing anything like that just yet, but you can see that by playing around with this, you can make several adjustments to a trade to save it or at least mitigate the risk. So the first adjustment's in, we've mitigated the risk by a little over $300, so that's great. At this point in time, we just need to monitor this probably over the next week and see if we get any kind of a pullback, at which case I need to make a decision on what type of further adjustment I would make to the trade. So with that, guys, I think I will wrap it up there. Like I said, doing that live stream tomorrow, so hopefully you guys can join me. Until then, I hope you had a great trading day, and I look forward to seeing you then. So take care, and we'll see you in the next video.